ሰላም እንዴት ናችሁ? ደህና ናችሁ ወይ? ሄርሜላ ባልቻ ነኝ ከባልቻ ግሩፕ ሪል ስቴት ኤጀንት በዲሲ፣ ሜሪላንድ፣ ቨርጂኒያ አካባቢ እንዲሁም ሌሎች ስቴቶች ከሆናችሁ 33 ስቴት የሚሆኑ ወኪሎች አሉን። ኮንታክት አድርጉን። እንደተለመደው ኤፒሶድ ነምበር 8
Yes.
and I'm here with Dennis B. Harris.
ሰላም እንዴት ናችሁ? ሰላም ናችሁ ወይ? እንኳን ደህና ተገናኘን ለኤፒሶድ ሪል ስቴት ቶክ ኤፒሶድ 8 ዲ ሃሪስ ነኝ ከዲ ሃሪስ አሶሺየትስ። ዛሬ በጣም ደስ ያለን ስለ አበዳሪዎች ብዙ እናወራላችኋለን፣ ግን we have Danny from Insta Mortgage that's joining us today እና በጣም ጥሩ ወሬ እንትንነት ኤጁኬሽን ይሰጠናል። አንዳንድ ጥያቄዎች ያላችሁን እሱ በእውቀቱና በስራው ይነግረናል። እሱም ነው ደግሞ ብዙ የምንጠቀመው። ብዙዎቻችሁ ፕሮባብሊ ስሙ ፋሚሊየር ነው፣ ሜይ ቢ ተገናኝታችሁ ሊሆን ይችላል። So Danny, welcome. We really appreciate having you.
Thank you for having me.
It really is great. With Hermela and I talk a lot about you. We work a lot with you and your team.
Thank you.
You guys are amazing. But today, I think it's a pleasure and a treat, honestly, to have you here to join us for our episode 8. Please introduce yourself. Tell us a little bit about what you will cover and
Sure.
just kind of get some of the topics.
Like Dee and Hermela said, my name's Danny Kim. I'm with Insta Mortgage. And, you know, a little bit of background. I've been doing this for about 34 years. So I sleep, walk, eat, you know, numbers and mortgages. So I thought the three basic things that go into what underwriters and lenders look for in qualifying, which is typically income, credit, and assets. Those are like the three big items. So I thought with the time we have, we can kind of, we can't go into a deep dive, but we can at least go just skim the surface of, you know, the essential things.
We'll do high level, cover those, and then we'll ask you some subsequent questions.
Of course.
Yeah, before we get into that,
Sure.
what Dee and I experience a lot, whether we're talking to an individual or we're on live or anything, they would be like, I make X amount of dollars. How much can I qualify for? And I always say, it's income, assets, credit, all that plays into that calculation. So it's not like I can tell you how much you could afford.
Sure.
But for someone that's trying to do a quick calculation to get their brain together, what would you say?
So it's going to vary according to the type of loan that you're getting. So let's just go with the most common one, which is a conventional loan. Under conventional guidelines, the math is pretty simple. It's let's say you make $120,000 a year. We use pre-tax income for salaried people, so that would be $10,000 a month. And all in, if you have excellent credit, let's say you have no debt, you can go up to 40. Your mortgage payment, that's principal, interest, taxes, insurance, and PMI and HOA. All that has to be within 49% of your gross monthly income. So for someone making $120,000, we divide that over 12. That's $10,000 a month. And then you just multiply that by 49%. And that would be your mortgage payment. But if you also have like auto loans, credit cards, student debt, all that has to be together with your mortgage payment has to stay under 49%.
Okay.
All right.
So basically like 4,900 a little.
Exactly. 4,900.
The example.
Thank you. Yes. Yes.
Okay.
So if we were to use $4,500, if you have zero debts, no credit card, no nothing, you can pay monthly $4,900. So you
Correct.
could buy a property for that value, whatever that value comes out to. Let's say $4,900. I have a $500 credit. I'm sorry, $500 car payment per month. Then the money I could use towards the house comes down to $4,400.
Correct.
Gotcha. And then
Yes.
the rest of the stuff I have, just subtract that to get to that.
Exactly.
Got it.
Yeah.
Makes sense. Okay. Thank you so much.
For sure.
But now you can go into your presentation.
Okay. So I think the one question that I get asked the most is exactly what we went over, like the debt to income ratio. And I'm going to skip that because we actually just spoke about that and how much you qualify for. But the one thing that is important to cover, I think, is income, because everybody has different methods of getting income. So for example, the simplest thing is you're a software developer, you make $120,000 a year and it's fixed income and you get bi-weekly or semi-monthly, income, then that's very easy to do because you're getting a set amount every month and it's the easiest thing to calculate, right?
And those are called salaried employees, right?
Those are salaried, like salaried employees,
Okay.
right, with a fixed annual income.
Yeah, before you go into the next,
Sure.
talk about the difference between what is salaried, what is W-2?
The salary is somebody who actually is, whether they take leave, they don't go to work, they're always going to get paid, let's say $120,000 a year.
And they don't get paid overtime or any of those things.
Well, no, they could get paid overtime.
Okay.
They could get bonuses,
Yeah.
but their base pay will never change.
Gotcha.
So if you're a government, like you're working for Booz Allen and you're making $200,000, you could take off for 2 weeks. You're still going to get paid off for your paid time off.
Gotcha.
And you always make $200,000
Gotcha.
annually. W-2 income, I think it's basically hourly income. That works a little bit differently. For example, if you're making $21 an hour, and let's say 1 week you're working 39 hours and the next week you work 49 hours, obviously, and then you want to take 2 weeks off to go to vacation with your family, you won't get paid for those 2 weeks, right? So that's what we call variable income. Yeah.
But if they have a vacation time, sick time, and that they are paid, it would be calculated for them.
Exactly.
All right.
Yeah.
So, keep on. Sorry.
Okay. No. Good questions. I like this. So basically, when it comes to income, a lot of lenders and underwriters, what they'll do is they'll look for a stable income, especially when it comes to people with variable income, where they're getting paid like different hours per week. They just want to make sure if you're like, for example, nurses, that's prime because their income's all over the place. If some nurses might work, let's say 40 hours a week, but then the next week their hours might drop to 29 hours, right? And so when it does that, we tend to have to average the income when the hours are not over 40 hours. So we'd have to, look at the last 2 years and your year to date and average the income. And if income is decreasing, for example, in 24, you made 80,000, but then year to date, you're not on track to make 80,000, then the underwriter is going to look at your year to date income and use that for qualifying.
Gotcha.
And not what was earned.
Exactly. And
how do you calculate? Let's say somebody's a nurse, but they also say do Uber or some other side
Sure.
income. When does that come into factor, or how? Like, can you explain that a little?
Sure. So the standard guideline for conventional FHA, VA, all these programs is that when you're earning income from two different employers or sources, you have to have maintained a history of working or holding two jobs for 24 months without any gaps. So, for example, if a borrower has a main job where they've been there for 10 years, and then somebody picks up a job and they have a second job, let's say
Delivering food,
and they've only been doing it for a year, then typically we won't be able to count that second income
until they reach 2 years.
Until 2 years.
Okay.
Yeah.
That's good to know.
So usually when I send people to you and they have worked an hourly job at a new job,
Sure.
And they've been working at that job for 5 months, and you always tell us at least we need a year in this job. Is that to understand how many hours they work and how to average it?
Yeah. So when someone's getting, again, going back to if a person's salary, if let's say somebody was driving Uber and they're self-employed, and then they decide, oh, you know what, like I'm going to study, become an IT professional, and they go get a job at an IT firm with a contract saying they're going to get paid $180,000 salary, then they could be there for 2 weeks and we can utilize that income.
You just need one paycheck.
Just one paycheck before closing. Correct. And so But when someone goes and gets a job where it's a variable income, right? Hourly income. I just had a person, I think it was your referral, which she didn't work for a while, and then she went to school, and then she picked up a job as a nurse, and her hours are all over the place. She's only been there for 5 or 6 months. When it's hourly and your income is fluctuating, we usually want a 12-month history to see how many hours you're working average per week. But if you are there and you can get a letter basically saying,
Just guaranteed.
you're guaranteed 40 hours a week minimum, and you have the paychecks to support it and the year-to-date income to support it, that you've been working 40 hours, then we could take that hourly worker, use the 40-hour.
Gotcha.
Yeah,
and that's the employment verification portion of it.
Exactly. And that's why when you come to us, it might take a little bit longer to get you pre-approved because we do a lot of digging, and to make sure we can get your loan approved once you're under contract. So,
I like to mention something to our viewers. So ምን አለ መሰላችሁ ቤታችሁን ለመግዛት በምትፈልጉበት ጊዜና ባንክ ጋር ደውላችሁ ፕሪ አፕሩቫል ወይ ከሞርጌጅ ካምፓኒ ጋር ደውላችሁ ፕሪ አፕሩቫል በምትጠይቁበት ጊዜ በ2 ቀን 3 ቀን ውስጥ ፕሪ አፕሩቫላችሁን ሰርቶ የሚሰጣችሁ አበዳሪ አለ። 2-3 ሳምንት ፈጅቶበት ፕሪ አፕሩቫሉን የሚሰጣችሁ አለ። በእኔ አስተያየት አሁን ለምሳሌ ከኢንስታ ሞርጌጅ ጋር በምንሰራበት ጊዜ 1 ሳምንት እስከ 2 ሳምንት ሊፈጅ ይችላል። እሱም ኤምፕሎይመንት ቬሪፊኬሽን የሚባሉትን ነገሮች ለማድረግ ነው። And in the 4 years that you and I have worked together,
yes.
There has not been one transaction that did not close.
Amen.
Not going. But most importantly, ለምንድን ነው እሱ? አሁን ከእሱ ጋር ወደ 4 ዓመት ስንሰራ በአመት ከ25 እስከ 30 ሰዎች እናጋዛለን ከኢንስታ ሞርጌጅ ጋር። ከእነሱ ጋር በምንሰራበት ጊዜ ቁልፍ እንደምንቀበል ምንም አይነት ጥርጥር አይኖረኝም። እሱም የማይኖረኝ ምክንያት ለምንድን ነው? ጊዜያቸውን ወስደው ከፊት ለፊት ብዙ የሚሰሩት ስራ ስላለና የሚጠይቁት ስላለ ጊዜያቸውን ወስደው ነው ፕሪ አፕሩቫል የሚሰጡት። So that pre-approval is good as money to go get it አይደለ? But the lenders 2 days, 3 days or 4 days or pre-qualification ብለው የሚሰጡን ቤቱን ካገኘነው በኋላ ቀብዳችንን ካስያዝን በኋላ ቤቱን መግዛት የማንችልበት ምክንያቶች ብዙ ነገሮች ሊፈጠሩ ይችላሉ። ከዚህ እነዚህ 3 ሳምንት የሚፈጁት 2 ሳምንት የሚፈጁት ሪሰርቾች ስላልተደረጉ ከቤቱ ከተገኘ በኋላ ይደረጋሉ። እሱ ለገዢም በጣም አፌክት የሚያደርግ ነገር ሊሆን ይችላል። ፋይናንሽሊም ደግሞ ቀብድም ከተቀመጠ በኋላ ሊጎዳን ይችላል። So እሱን keep in mind. Go ahead.
So some of the topics we went over the income, documentation. Typically, if you're on W-2 income, you need 30 days of pay stubs. Sometimes we might ask for more to get a track record of your hours worked if you're an hourly worker. Typically, we need 2 years of W-2s. And the slide basically shows what a W-2 is, because a lot of times we ask for a W-2 and they send their whole tax return.
Mhm.
And that's our job. Sometimes we'll ask for the whole basket of documents. So me and my team could weed through to see how to structure the loan, weed through the documents to make sure, hey, we don't need this, we can do it this way.
Gotcha.
So it's there to help the borrower.
Yeah.
Tax returns are typically only required when you're either self-employed, right, and you're filing a Schedule C, you have an LLC or S corp or a C corp, or if you have rental properties. When you have rental properties, you're going to file a Schedule L, and it's going to be show on there. And that's why we would ask for tax returns, because especially with rental income, a lot of the clients that I speak to, I say, how much is your rental income? And they'll do it simply, well, my mortgage payment's $2,000. I'm getting $4,000. So I'm making $2,000 a month. And it doesn't always work that way, because we go off of whatever you wrote off and we add back depreciation, taxes, insurance, certain things, line items on there. Stability of employment's another great, huge factor. Stability is to make sure that, if you have somebody who's hopping jobs every 3 or 4 months, the underwriter's not going to like that, because a lot of times when you're doing this, there's always going to be a 2, 3, or 4 week gap between the jobs. So they like to see a stability of you having continuous employment. Yeah. Bonus, commission, overtime income. Those are kind of tricky areas because a lot of, we have a lot of clients who might get, like, for example, in 23, well, I'll give you a prime example. Going back to nurses, right? During the COVID years, I see a lot of nurses that have a base pay of like 80,000, and then they have like these 30,000 overtime and bonuses because they work a lot of hours.
Yeah.
But then you go into post-COVID, their base pay is the same, but their overtime bonuses decreased by, like 100-fold.
Mm-hmm.
So in that case, we can't average, the 100,000, like the 30,000 they made, and for the past 2 years, we have to go off the lowest number. So we're always using the worst case scenario.
And that is also the case for credit scores when two people apply like a couple.
Yes.
You go with the lowest.
So when it goes to credit scores, we pull from 3 bureaus. It's called the Tri-Merge. So it's Equifax, Experian, TransUnion. And when there's 2 borrowers, what we basically do is we take the lowest of the scores
Yep.
of, the husband or wife.
And it's my understanding the reason that is being done is to mitigate risk for the bank. They want to look at the riskiest individual and base it off of that. Similar to the income, if the income is fluctuating, if they're changing jobs and things like that, it's the risk factor that's keeping them from getting a loan.
Yes, correct. Yeah. And another, since we're on the topic of credit, one thing I get asked all the time is, hey, my credit score, my freecreditreport.com score is 790, but why are you pulling 720?
Mm-hmm.
And that's because on the consumer side, they're using a different scoring model than when lenders pull it for, to get a loan.
Can you explain why?
It's the simplest way to explain it is when lenders pull it, Fannie, Freddie, HUD, they require a weighted credit score. So, for example, like a late payment on the consumer side, it might only affect your credit scores by, I don't know, 10 points. But on our side, it's a little bit more stringent when we pull it. So it might skew the scores by 50 points, I would say. Yeah.
So it's based on industry and based on what you perceive that risk to be for the.
Exactly. So when you go buy an auto loan, they usually pull from TransUnion or Equifax, and they only pull from one. And going back to the 2 borrower situation, they're always looking to use the higher credit score to get you the better rate, better terms. In mortgages, we're always looking at the worst case scenario. Self-employed, that's a big thing because there's, especially being in the DMV,
yes,
there's a lot of people who are self-employed, like Uber drivers or,
government
contractors. I think it's important to note what, especially like 99% of the self-employed people that I get are all filing a Schedule C. And when you ask them how much they earn, they're looking at the 1099 they received. And they're saying, oh, I made 250,000 last year, but that's not the number that we use. We use after-tax income. So the simple rule of thumb on a Schedule C is take line 31, which is net profit. So we add back in, we use line 31, which is net profit, plus we add back in any depreciation, and then we add back in any business miles that we claimed. And every year this changes. I think for 2025, we can count 30 cents for every mile that you claim. And so that's the income we use. And then if you did deduct anything for meals, we would have to subtract that from the total. And so that would be your annual income. So if you have somebody who's earning a 1099 of 200,000 and their net income, they wrote off all the stuff, and their net income says 50, and then you have depreciation of 10, And then to make things easier, like you have 1,000 miles, right? So you basically have the 50, the 10, and 1,000 times 23, I think that's 300.
Yeah.
So you would add that, and that would be your annual income that we can use.
Gotcha.
So that would be 60,000.
Yeah. So line 31 plus line 13
Yes.
is what your income is.
Plus the depreciation.
Plus the depreciation.
Well, line 13 is the depreciation.
And miles is something.
And then miles is on page 2 of your Schedule C.
Okay.
It's in section line 44A.
Perfect.
Yeah.
Great. So that is 1099.
That's 1099. One more thing I do need to add is for self-employed, if you have good credit and you've been self-employed for 5+ years and can, support that with a CPA letter, then we can get you qualified with 1 year of tax returns
Fantastic.
versus 2.
Perfect. So question on that. When you say good credit, what's 700 plus, 720 plus? Like, where do we need to be for that 1 year?
So yes. So ideally, if you're putting down 3 to 5%, you want your credit scores to at least be 720.
Okay.
But if you're self-employed, you're a person putting down 20%, a lot of times we can get it even with a 680 credit score. Yeah.
Can I ask you, like, talking about the number of years, if I'm not self-employed, but I'm actually salaried, I've worked for 1 year, can I still get a loan, or do you need to 2 years?
We need a 2-year history of school, or work.
Okay, if you were in school, but you work for 1 year,
That's fine.
that's fine.
Yeah, we just need a school transcript to document the number of years you were in school.
Okay.
And the 1 year that worked.
Okay.
Another thing, since you're on the topic, this comes up a lot. You have professional moms that highly educated, a lot of times, more educated than the husband. So they had a career. They took off like 3 or 4 years to raise their kids, right? And then they go back into their career. So a lot of times, if they're back working for a year, right, and we could document that they took off for 3 or 4 years and document that, hey, this is, they were in this profession and they went back into that profession, and we can go back to 2019, let's say, and document they were working, then typically we can do that with the 1 year
With the 1 year.
history.
Okay.
Yeah.
I'm gonna say, okay. So what you just said is that if a mom, she's a doctor, and then she had her first job, she took 3 years to 4 years at home, and then she came back to being a doctor again.
Yes.
Then that 3 to 4 years of being home, if they're able to document it, we could use that as time that they were just like school.
Well, not that. Basically, we would need to show that she worked
Before that.
prior.
Gotcha.
Yeah.
So let's say she's a doctor and she was at home for 3 to 4 years. When she came back into the workforce, she decided to do something different. Would that still qualify, or she would have to go back to the same profession or similar?
Typically, it has to be a similar profession.
Gotcha. All right.
The one thing that is assets. So typically for assets, when you're buying a house, we're going to look at 2 months of your bank statements. And what a lot of people don't look at is, they say I have 100,000 in my account.
Yeah. But
any large deposits, they're going to look at a history of 60 days on your bank account.
Yeah.
And the underwriter's going to look at several things. They're going to look at your deposits outside of your regular payroll. So if you have a large deposit, they're going to question where that came from. And if you can't source it, they're going to net that out of the 100,000 that you'll be able to use for the transaction, right? One thing, typically like these days, we see a lot of Zelle and Venmo deposits. You want to kind of avoid that. So if you're planning to buy a house, the less transactions, the better. No large deposits, definitely no cash deposits, because they can't be sourced.
So when you say no large deposit, if Dee was to write me a check for $25,000 and I deposit that money into the bank account.
That's fine.
Okay, then you would ask me, why did Dee give me 25,000?
Exactly.
Okay, and then I tell you
Oh, it was a gift.
it was a gift, or he owed me money, he paid me back. Like
Sure.
those.
When you say, and that happens a lot in, both my culture and your culture, you're writing your friend a check for 10,000 and they pay you back 3 years later. Well, so when that does happen, you say, oh, I lent this person money and they pay me back. What the underwriter's going to ask for is they're going to ask for the original note, right? And they have to document the money that you sent the 10,000 3 years ago.
Okay.
So you would need that information.
Phenomenal.
So we need to kind of be careful how we manage that.
Exactly.
Okay.
Or how you disclose to the lender, hey, what this money's for.
Gotcha.
Yeah.
So it's important. Any other questions?
And there's one thing that I have run across that, and we have this in my community as well. I forgot what it's called.
Cool.
Yes.
Yes.
Where you got like 20 families, everybody chips in $100 to $1,000 a month, and everything goes to one family, right? That is not understood. So
in most cultures, yes.
in most cultures. So especially in mortgage underwriting, when you say, oh, I'm in this money pool, they're going to look at it as, okay, this is $1,000 you have to pay out for the next 20 months. So they'll consider it as that. That money, that money,
usually say is,
put it in your account, let it sit there for 2 months.
Correct.
For 60 days.
60 to 90 days is what I usually say. በጣም እናመሰግናለን። ዛሬ ኤፒሶድ 8 ከዳኒ ኪም with Insta Mortgage ጊዜያችን አሳልፈናል። ብዙ ነገርም ተምረናል። ሄርሜላ ባልቻ ነኝ እንደገና ከባልቻ ግሩፕ። The Balcha Group on Instagram, the Balcha Group on YouTube, and the Balcha Group on Facebook, and Hermela Balcha on Facebook ላይ አለሁኝ። በጣም ነው የምናመሰግነው።
ለዛሬ ስለተገናኘን በጣም እናመሰግናለን። ዲ ሃሪስ on Instagram, D Harris the Realtor on TikTok, D Harris and Associates on Facebook. በጣም እናመሰግናችኋለን ለዛሬ ለሪል ስቴት ቲክቶክ ጆይን ስላደረጋችሁን። Danny, thank you so much for coming.
Thank you for having me.
Thank you
very much.
Please tell them a little bit about how they can reach you or anything.
Best way is just call me at 301-509-9999. You should be on the slide, or you could email me at danny@instamortgage.com.
Thank you, Danny.
Thank you.